Good morning, it's Jonathan Barrett with the morning debrief. It's 8:11, it's 23rd of February 2011. Obviously a lot of news to get through today, and obviously a lot of concerns, as we see what's happening around the world. We certainly send our condolences and support to our New Zealand friends, obviously with the concerns that have happened over in Christchurch. As a result of that, we have seen obviously that currency under a lot of pressure, believe it or not. But hopefully it'll come back to some steady ground pretty soon. Also, obviously, concerns over in Libya as things look to deteriorate there again. Gaddafi actually mentioning that he will fight to the end, so it's a little bit of issue there. The main point of concern that we do have is if people's contagion will spread, or people's contagion will cause a lot of unrest in the market, and as a result of that we're seeing a lot of volatility in crude, as you'd expect. Now, last night's price action was quite unbelievable, and I'll just walk you through it just quickly before we get into it. And let's look at this, the movement here, high of 93.94, and then we dropped all the way down to 90, and then we travelled all the way up to 95. Very aggressive style of movement, and I think at the end of the day we actually feel that the absence of Libyan oil on the market won't create too much of a concern. The concern is that it spreads to other Gulf regions. This is something we have highlighted a long time ago, and it looks like it seems to be panning out. Okay, but apart from that, we also have quite a negative night on equity markets. So I think let's go into it, and let's get you a little bit of an overview as to what happened for the equity markets. Right, here we go. Okay, the Dow closed down 1.44%, 12,212. The S&P down 27, the Nasdaq down 77. They were playing catch-up, okay. They're certainly playing catch-up to Europe, which was under a lot of pressure the night before. Obviously, we had the President Day holiday, and so the market was just playing catch-up, as I mentioned. Looking at, let's just get the rest of those markets because we haven't got them all. There we go, that's what I want. Whoops. Okay, the top 50 was down 29, the FTSE down 18, CAC was off 47, the DAX was down 3. Our local market also took a bit of a beating. The local market was actually down 43 points at 4,803. So that's certainly under a lot of pressure. Now, I just want to show everyone, have a look at this trend line that has been broken on the Dow. And there you see the movements there, very volatile. Looks like the plunge protection teams are in here. But have a look at the daily chart. And as you can see, this is the first correction of quite some time. So this could be, if anything there, at the start of the move lower back to this trend line which we have seen here for some time. And I think if you say, look, August 2010, then the correction could be there quite some time. Let's see what happens. But we did, on the back of that, get some reasonably good confidence data. I think the best in 3 years that came out as well. So that in itself was quite positive. Let's have a look at our local market, 4,803. And as you can see there, it has pretty much broken through that trend. Now, we have broken through this trend line before and managed to go higher. Now we're on the other side of it. Now, if we can't break back through yesterday's high, then we feel that we can actually travel down to that 4,720 area of support, maybe a touch lower. If you were following the tweets yesterday, we did put out a tweet to everybody, just basically saying, you know, that we feel that there is a bit of an issue out there, and the catch-up we'll see now that we are in fact hedged on our equity positions. So I think if anything there, you just got to, there we go, the hedge we put out, the Twitter we put out, keep an eye on the SPY. We've seen divergence occurring on a daily basis, and the break below 48.30 sees potential for a move lower. That was done yesterday, and as you can see, we have broken through that level, and probably this divergence here is what I've been looking at, and that normally precipitates a move quite substantially lower. But keep close to that and see what happens on that front. Okay, now let's look at some of the other commodities. Copper is under correction mode, there's no doubt about it. There we are back to support, probably extend it back to 424. That sort of feels as if that trend is intact. Looking at crude oil, we've talked about crude oil, dollar index, very volatile night, but look, it's going to remain volatile, but I actually like that bit of a bounce here and big support. Change of rhetoric through a break of 77.50, but as that holds, I'll see the US dollar looking too firm. It might actually pitch some good status there as a safe haven status as well. Okay, now have a look at some of these other things, particularly the commodities. A very large correction in corn, soya, and wheat. Wheat's probably the largest one there, which we've had a limit move back into support here. And that basically looks like it's a correction. We're trying to find out news as to why wheat did come under such an enormous amount of pressure, but it certainly has. But in my mind, the long-term picture remains pretty astute that it's certainly going to trade higher. But as we've always said, you can't stand in front of it. Just a quick note here, see that there? And see that there? Perfect example of divergence again. So as you can see, we have a lot of faith in that instrument. Corn also under pressure. Like this corn, I think you'll probably find that any rally you probably want to get out of. Same with soybeans, under pressure there as well, but soybeans I think is a little getting closer to a low. But I still think there is a bit of concern there in all the grain markets at the moment. We can't see it on the fundamental side, but technically it's certainly moving, and maybe those fundamentals will come to the fray pretty soon. Okay, gold. Let's have a quick look at gold. Gold 1398. Look, it seems to be just holding here, but I don't like this style of. It hasn't told us that it's a sell yet, but I think that if it starts to take out the lows last night, I'd certainly be tightening my stops up on positions on gold and silver. Just looking at silver there, a very, very volatile move there, and still haven't recovered as much. So I'd expect some nervous longs there, and probably expect some correction pretty soon. Okay, so that's that. On the economic front, what do we have that's coming out? Construction work done in Australia, wage cost index, pretty important. And we've got, I guess, Bank of England minutes, which were pretty important, CPI and some of the Italy and the like. Eurozone industrial and the euros. I'm going to keep an eye on those ones because I want to see a little bit of growth there. And in the States, MBA mortgage applications, existing home sales, which would be a good one, and existing home sales. So let's see what those numbers come in. And also we've got the in Australia, excuse me, consumer board leading index, which I failed to mention earlier. Well, I guess that's pretty much about it from me. I guess just so everyone knows, on the gold position, we did take some profits yesterday. It has been a great trade, so quite happy about that. The main positions we've got on now are some small grain positions, which we're looking to exit, and we're also looking at still short the SPY, and we're long US dollars. So they're probably the main things. I'm trying to work away. I'm trying to get myself into copper because I think that'll correct a little bit. But given the supply concentrate that supply restrictions we've got there, I think it'll probably just be a dip to keep an eye on. So I wouldn't go short there. Okay, so that's about it. Have a great day, and we'll certainly talk to you tomorrow.